Currencies and blockchain, hosted by OMFIF's Digital Monetary Institute. OMFIF is a central bank think tank based in London, and our central bank members and the central banking community who we serve span all the continents of the world. OMFIF launched the Digital Monetary Institute in May of this year in response questions. But audience participation does not end there. Please make sure that you use the chat function if you're on Zoom to ask any questions throughout this session. My colleagues will help me by passing on questions to me that they receive during the session. If you could just say where you're from when you ask a question when you're writing in the chat function, that would be very helpful. Also, if you're watching on YouTube, please leave a comment in the YouTube box so that we can ask your question and fit that in as well. So we have 5 panelists joining me today who are part of the Digital Monetary Institute, and it's an absolute pleasure to welcome them all. I'm not going to ask them to introduce themselves one by one, as that can take some time in this digital format of meetings, but I will start with an introductory question to each of them, and as they answer, they can say a little bit about who they are and what they do. We have 3 central banks who are on the panel, all of which have been central banks that have been doing a lot of work in the area of CBDC, and we have 2 private sector organizations who have been at the forefront of some of the most interesting technological advancements when it comes to digital currencies. Annika Sombati, if I can start with you from the Hungarian Central Bank, can you please tell us what you have been doing in regard to central bank digital currencies and what you see as the primary benefit that the Hungarian Central Bank are seeking to achieve with the potential launch of a CBDC? Annika.
Thank you, Chris. Good afternoon for everyone. I'm Annika Sombati, Executive Director responsible for digitalization and fintech development and CDO of the Central Bank of Hungary. So, Central Bank of Hungary believes that this area has to be implemented, but in a step-by-step approach. So we believe in launching with small pilot projects and learning what we have to learn and then move on to a bigger scale. So we have been working on a project called Students Saving Application that will be launched already in September, but only for a limited number of schools in the first year. The application is very simple. The students can collect digital coins by answering quizzes, and these coins are coming randomly, so these can be exchanged and collected, and at the end of the savings period, they can redeem valuable presents, actually from the central bank foundation. So it's a really small scale project.
How widespread is this, Annika? How many participants do you expect from Hungarian school children?
So we aim for 2,000 in the first round. And the next year, if everything goes well, we will expand the program, and we will include, of course, real-life payment possibilities. And this will be the point when we consider to put the system on a centralized DLT platform, so that we can benefit from all the advances that this technology offers. The other project has been launched only recently, and it will go live next year when the Hungarian currency, the forint, will have its 75th anniversary. And this will be a collector coin register, first of all, like a registry for precious watches or paintings. So precious gold coins especially can be registered and tracked during the circulation on a blockchain system. And we will have a special program also related to the anniversary, when the 6 letters of forint will be able to be earned in a digital form, and of course by filling up quizzes on financial literacy, and this has to be exchanged. And when all the 6 parts will be collected, then the participants will qualify for physical reward coin sets that can also be fed into the previous system, the coin registry system. So they will have a special identifier, a QR code actually, on the blister, and this way the owners can register and track what happens with them. So all these projects seem to be very small scale, but we deem that they are serving very essential central bank goals. First of all, of course, they help us in financial education, and also in promoting the adoption of electronic payments in special groups, especially for young children. And last but not least, they give us the opportunity to lead by example in the public sector in Hungary by adopting innovative technologies. And during this adoption, we hope that we can identify all the potential bottlenecks, potential gridlocks, or even legal problems that we can solve much more easily in this scale as compared to a huge scale retail CBDC. Thank you.
Thank you for sharing that, Annika. I think that's new information that we're hearing for the first time. It's fascinating to hear how the Hungarian Central Bank have really taken this to the new generation in your experiment. We've heard lots of different types of experiments, but this is one that's particularly interesting, the way you're engaging with school children and the younger generation. Simon, I know the Bank of England have done much research in this, in terms of all the central banks out there, the number of research papers, the expansive approach that you've had to collecting feedback from market participants in London and elsewhere has been very interesting. I mean, what would the Bank of England like to see from the launch of a potential CBDC?
Thanks, Chris. And hi, everyone. So just to introduce myself briefly, my name's Simon Scorer and I work in the Bank of England's FinTech Hub. So I guess to caveat some of my kind of thoughts during this discussion, any of the opinions that I express may be my own rather than the Bank of England's, but I'll try and make that clear when that's the case. So yeah, we published, as you alluded to, we published a discussion paper earlier this year on a retail CBDC. And that's because we're seriously considering the benefits and implications and practicalities of issuing a CBDC, but we don't have all the answers yet. The paper was intended as a starting point to gather feedback. We want to start a discussion and we want to hear from experts in a wide range of fields on the issues that are raised. it's important to note we haven't yet made any decision on whether to actually issue a CBDC yet. To your question about why we're looking at it, so we recognise that we're in the middle of quite a period of rapid change in money and payments. Technology advancements are creating new ways to save and to pay, and new forms of private money are on the horizon. Some of these things like stablecoins may become systemically important in time, but they may also pose risks to monetary and financial stability. And currently in the UK, the Bank of England provides the safest and most trusted form of money in the form of banknotes and in the form of electronic reserves, but households and businesses can only access this form of money in the form of banknotes. So this raises a question for us around whether we should leverage these advancements in technology to provide a new form of electronic central bank money, i.e. a CBDC, as a complement to cash that could be held by the public.
So it sounds like the main driver there is a complement to cash. It's focusing on the retail side, and so that's kind of driving much of the bank's work at the moment.
Absolutely, we see CBDC as being not kind of a binary decision. A CBDC would sit alongside cash, but it would also need to sit alongside private sector to payment development. So finding that space for CBDC is one of the important kind of questions and challenges that we need to answer. Sorry, Chris, do you have another?
Go ahead, Thomas. Sorry, go ahead, Simon. Finish off. Yeah.
Sure. So CBDC would clearly be at the heart of everything we do. Presents a lot of opportunities for monetary policy, financial stability, payments. And the paper we put out in March outlines several possible opportunities for CBDC, how it may help our objectives in this space. I'll just touch on these really briefly. So some of these are around supporting a more resilient payments landscape, avoiding some of the risks of private money creation, supporting competition, efficiency and innovation in payments. A particularly interesting one from a technology point of view around helping to meet future payment demands in the digital economy. So creating kind of a wider set of products, maybe this could lead to micropayments, the use of smart contracts, and providing, ultimately running through this, providing a safer kind of continued access to the public to a risk-free form of money to, as you say, to complement cash, a kind of digital alternative. But as I say, we haven't got all the answers yet, and we're still working through a lot of these issues. One thing also I'd note on the motivations question is that the motivations and circumstances will vary. On the motivations question is that the motivations and circumstances will vary quite dramatically from country to country and jurisdiction to jurisdiction. So there may be quite different set of motivations coming out of different parts of the world. For example, financial inclusion could be a really big motivator in certain parts of the world. The decline of cash is more advanced in some places than others. The capabilities and deficiencies of existing infrastructure are varied. So all of these kind of lead to quite a different set of circumstances in each jurisdiction.
Indeed, and that's one of the things that we found with the Digital Monetary Institute. We've had central banks from all over the world talking about their experiments, talking about what they want to achieve. And this is where it becomes most interesting, and where, in a sense, that public-private sector involvement becomes even more important, because central banks do often have quite clear policy objectives in terms of what they're looking for. And these types of discussions endeavour to cut through some of that. Thomas, if I can turn to you, I mean, the Swiss National Bank has been one of the pioneers in some of the work here. Please tell us what you have been doing and when we would expect to see a CBDC from the Swiss National Bank.
Thank you, Chris, and thank you for having me on this panel. It's a pleasure. So in terms of motivation, it's, I think, very interesting that in the case of Switzerland, it was not really the initiative of the Swiss National Bank, but we were confronted with a DLT project coming more or less from the private sector side. So in Switzerland, the Swiss Stock Exchange intends to build a DLT-based digital exchange, and they intend to go live next year already. So that will be a fully regulated, end-to-end and fully integrated digital asset trading, settlement, and custody services. And so the question, of course, came up, how do you pay on this DLT? What do you do with the cash lag? And their solution is that they will create the stable coin, Swiss franc-backed stable coin, and that's how they intend to go live next year. And for us, then the question came up, wouldn't it make sense to see whether we have central bank money on that DLT? Because normally as a central banker, you want to have, especially on systemically critical infrastructure, you want the payment be done with central bank money, because then you have less risk. Central bank money is the only type of money without counterparty risk. So we are doing two proof of concepts. One is that we issue a wholesale CBDC on the DLT platform. And the other one is that we see whether we could hook up just the DLT to our traditional payment system, to our traditional RTGS system. So we intend to issue our report on that within this year, by the end of this year. We have not made a decision yet whether we will go live with one of these solutions, even though Swiss Digital Exchange will go live. If we are not with them, they will go live with their own stablecoin beginning next year. So in terms of motivation, it's a little bit different. We are confronted with a real use case. And I think it's also different from other central banks, that this is not an experiment, not a pilot. Yeah. It's really a concrete use case, and we have to react to it.
That is fascinating. So you're kind of being pushed by the Swiss Digital Exchange there, and it's quite likely that people who did answer that question in the poll saying it would be 4 or 5 years ago may have been getting that question wrong if the Swiss National Bank do indeed decide that 2021 is the year. So maybe people will change their minds when we ask that poll at the end. But thank you, Thomas, that's fascinating. We'll come back to some of those points, particularly about how you will link the, whether you'll link the RTGS to the new technology that you described, or whether you would do a wholesale replacement. That's absolutely fascinating. Sky Gao from Cypherium, you've done a lot of very interesting work on blockchain in particular, specifically blockchain innovations that can serve digital currencies, serve central bank digital currencies. From your point of view, rather than asking about the motivations, who do you think the winners and losers will be from CBDCs?
Thanks, Chris, for having me in this meeting. I believe that both wholesale and retail CBDCs are necessary. If a central bank only uses wholesale CBDC, not retail CBDC, it needs to manage both digital currency and cash in its financial system, limiting the efficiency of CBDC. On the other hand, without a wholesale CBDC, the central bank will lack the tool of delivering its CBDC to commercial banks. If I have to pick a winner, I'd go with retail CBDCs. Retail CBDCs are designed to replace cash. Cash has many disadvantages, such as physical insecurity, forgery, lack of hygiene, and other practical inefficiencies. Retail CBDCs address these drawbacks. Retail CBDC can also accelerate the propagation of monetary policy. For example, if a central bank wants to adopt negative interest rates, it would be difficult to do this with cash, but retail CBDC can do it easily.
Thank you, Sky. Yes, that shows what, I mean, and in terms of the winners and losers, I might ask Case that question from ING Bank. What could make ING Bank a winner from the launch of CBDCs? Case, just tell us a little bit about some of the technology work that you've done, and see how we can cover that.
Yeah, thanks, Chris. So in my role as IT manager of ING's blockchain team, I can only conclude that the winners will be those who have most experience with blockchain. And let me explain that by two scenarios. I mean, in the unlikely scenario where a retail CBDC will be positioned as a savings product or used as a savings product, a counterparty risk-free savings product, which would compete with current private sector banks, and therefore would erode the deposits, the savings deposits our customers do today, and therefore negatively affect our balance sheet and our capacity to provide loans. Basically, the whole economy would be negatively impacted by the reduced capacity of the wholesale banks to provide loans. In a more likely scenario of retail CBDCs, which are positioned as an alternative to cash and will be used for payments only, the scenario Simon Scorer also just described. The losers will be the banks that are too conservative and stick to their traditional business model. Let me explain it by turning it around and talk about the winners. So the winners will be the banks that have been investing a lot in blockchain and DLT, and due to their expertise, they can understand the benefits and think of different business model. For instance, by providing and running the required infrastructure or technical solutions. Because mind you, that the current blockchain technology is not as mainstream as most of the centralized technology that we use in today's payment systems. So many of these systems, they require improvements, for instance, to the scalability, number of transactions per second they can process, or privacy features. How do you make sure that you keep your sensitive data private, which is less evident in a decentralized system? So banks who master that will be more successful in the post-CBDC scenario. And mind you, that we as ING, we want to be a tech company with a banking license. And this is why ING has been contributing to improve blockchain technology ever since we started using it. We contribute, for instance,
with a banking license. It's an interesting description of what people might have previously seen as a commercial bank. So, I mean, in terms of a tech company with a banking license, as you, the work that you've done on blockchain, how do you see this? I mean, we've seen the sort of public blockchain model, which is sort of Bitcoin and so on, and there's the private blockchain as well. Talk to us a little bit about how those two different options can serve this CBDC work that you're doing.
Yeah, so and please note that us wanting to be a tech company is not limited to the use of blockchain. We do many things with machine learning and all kind of other fields. Specifically for CBDC, we gained a lot of experience with Finality and their USC solution. Their platform could serve as the infrastructure underpinning CBDCs. Also, when it comes to retail CBDCs, somebody will need to manage the private keys that access these digital currencies. And you see with public cryptocurrencies, that's kind of messy. An end consumer can lose its private key, lose access to its assets. We as ING obviously have decades of experience with private key infrastructure and managing those keys. For instance, when it comes to managing digital assets on blockchain, we use military-grade hardware security modules to safeguard private keys. Also, we have an even more state-of-the-art invention and home-built multi-party computation threshold signature solution, which also protects customers against losing their keys. If a majority of keys are lost, only then the access to the assets is lost. Which is also why in our team we have now 3 patents filed for the work that we do to protect our IP. So specifically, how can we win from this situation? By providing our services and get a fee income from it. So completely different model, business model than the traditional wholesale bank model. Yeah.
So a change in sort of fractional reserve banking, certainly. But if we look to, if I turn that question to Sky, in terms of the options there of the public blockchain and the private blockchain, in terms of how you can see CBDCs best being served, Sky, what do you think is the best way that this technology can be used?
I believe that both private and public blockchain will be used for CBDC. For the central banks, they are likely to use private blockchains because they need to protect the privacy of its financial systems and its citizens using the CBDC. However, the private blockchain creates a barrier of trust and interoperability. And that problem could be resolved by the public blockchains. So previously, most of the CBDC research are done regarding the private blockchains. The public blockchain have a better availability and robustness. For example, the Bitcoin network has been running for over a decade uninterrupted. Public blockchains can also resist censorship. They allow unobstructed flow of data and messages, resisting unfriendly government interference. We know that currently US and China has a tension going on, and the US is about to ban WeChat. If WeChat is banned, then the WeChat Pay is also likely to be banned. A public blockchain usually has thousands or even tens of thousands peer-to-peer nodes, making them practically impossible to shut down. Moreover, public blockchains are easy and inexpensive to operate. There are no membership fees required to access a public blockchain. And the public blockchains are transparent and trustless. They can serve as a witness to private blockchain transactions. So if Alice were to send Bob money and Bob wants to make sure Alice will not reserve the payment, a public blockchain transaction can prove that Alice has made the payment to Bob and cannot double spend this money. It will be impossible to violate a well-defined public blockchain protocol. Central bank control can also be achieved on public blockchain with greater trust. Moreover, public blockchains may also improve the internalization of a currency. Stable coins backed by fiat currencies have already been successfully implemented on public blockchains and used for cross-border transactions. And finally, a public blockchain has the highest level of transparency and trust. And this is crucial to any international business. Take a simple letter of credit use case. The importer and the exporter don't trust each other. And fraud is impossible for law enforcement to pursue due to the lack of jurisdiction. Using a public blockchain, the importer deposits the payment into a smart contract, and the smart contract will only release the payment to the exporter after receiving confirmation from the shipping company. Each party can see and verify smart contract and trust the execution of the public blockchain.
Thank you very much, guys. So kind of a real rallying call for the use of the public blockchain there. I've got a couple of questions that have come in already from the audience, or both for the central banking community. A question from David Birch to you, Anniko, about the role that blockchain is playing in the Hungarian central bank's experiment there. I think this was for the centenary digital currency issue. David was just asking about who the whole purpose of blockchain is that the consensus means that third parties can be brought into a situation where they can be trusted. But why would you need that? Who are the untrusted third parties for whom blockchain is required to uncover or to note? Who are you concerned about? Is there any particular reason why blockchain would be used for that experiment to link to trust, Anniko, that you outlined in your introduction?
So actually, if we think of the student savings program, we plan to use a private blockchain or DLT system. And major benefit that hasn't been mentioned yet is that we hope that with this technology, the offline transactions can be executed as well. So
is that the reason why you're using the blockchain technology, so that the offline
centralized blockchain technology? Yes.
I see. Okay, now that's interesting, and that makes sense from there. And also a question for Thomas regarding the SNB situation. I mean, where will accountability reside between the Sixth Digital Exchange and the Swiss National Bank for the Swiss bank-backed stable coin? So I think this is the option if the stable coin goes live. If that's the only thing that happens first, where will the accountability reside? How will it be treated? That was a question from Martin Watkins, the CEO of the Cornswood Group.
So the idea there is that the SDX, the Swiss Digital Exchange, will open an account, a settlement account with us, with the central bank, and that will then be used as collateral for the stablecoin. Mm-hmm. Which, of course, that also shows you the issues with stablecoins in general. If you have them fully collateralized, collateral is expensive. We currently have a negative interest rate on our account, so that could be expensive to have a stablecoin. I mean, that's also one reason I think for SDX it would be much more interesting to have real central bank money on the blockchain, and for the banks, I think it would be interesting to have real central bank money on the blockchain, because then Also, in terms of regulatory costs, it will be lower because their capital exposure, their liquidity exposure is much smaller than when they have a credit risk to the Swiss stock exchange.
Is this the end of the RTGS then? Is this the end of that?
No, see, I don't think so. I thought the question before was very interesting to me, and that's exactly where do you need the blockchain? You know, and in our case, exactly, we didn't come with the view that we have a CBDC and we need now a blockchain, but we are confronted with a blockchain. So there is a use case apparently in if you have securities trading. So you have less need for reconciliation. You don't need a segregated data source and so on. So there's a use case independent of the CBDC for this digital exchange. If you talk about RTGS, there were some wonderful experiments done by the Bank of Canada, Bank of England, ECB, and so on. I think they all showed that if you just want to do payment versus payment among banks, then a blockchain doesn't really give you many additional advantages, and in that case, it's not really necessary to replace the RTGS. It's apparently just as good. So if you do not start with a very modern RTGS, you might as well think about doing this with a DLT. But if you have a very modern RTGS, then you don't need to replace it. And the other experiment we did, and you asked me about that, can we just hook up the RTGS to the DLT? And I mean, we will come out with the report, but you lose certain things that maybe are important for the DLT. For instance, if you want to have atomic settlement, atomic swaps, you can, that it's very difficult then to do. On the DLT, you have one leg and the cash leg on the RTGS, then you do not get that advantage from atomic swaps. So in that sense, it's difficult to hook them up, but I think for different use cases, you can have different types of infrastructure.
Thank you. And I mean, Simon, from your point of view, I mean, one of many of the central banks have spent a lot of time looking at the kind of risk analysis here. I mean, what is the biggest barrier to these larger technology changes? I mean, say that it was to be a blockchain solution, wholesale or retail, if you were to look at either of those options, I mean, is it the political risk? Is it the fear of technical failure, the lack of legal surety, the lack of liquidity in a new system? What are the things that keep your bosses, the governor and the MPC, awake at night when you've written one of these reports saying, look at what we can do with CBDC?
That's a great question, but before I come on to that, can I just circle back to the relative merits of blockchain for CBDC? So just, I guess, my view on blockchain and CBDC is that CBDC doesn't necessarily automatically need blockchain. In theory, you could certainly create either a retail or wholesale CBDC using some other form of technology. And I think it's important to note the origins of blockchain in this sense. So I think to the question that was asked earlier around what the kind of intention of the original Bitcoin blockchain was around kind of creating this trust amongst a group of participants. Bitcoin came from a very different starting point to a CBDC. Bitcoin was designed as an alternative to a system where you need to trust anybody, in particular central banks or commercial banks for that matter. CBDC is clearly a very different proposition. By its very definition, it's a central bank asset, and therefore there is a certain amount of trust in that institution. And I think in coming up with technology solutions to that, it would be foolish not to kind of acknowledge that there is some form of central trusted party, and then building a system around that is somewhat sensible. But having said that, I think clearly the world of blockchain and DLT provide a whole host of innovations that may be useful in creating central bank digital currencies, and that may not be a case of taking all the features of blockchain, but picking and choosing different features. I think that's the way I like to think about it, is not to say we're going to take a blockchain approach or not a blockchain approach, but to unpick some of this family of features that exist and innovations that are emerging, and see where these are useful and where these are problematic in the thinking around design for central bank digital currency. And I think kind of maybe linked to that, thinking about your question around what the kind of biggest challenges here are, the biggest kind of barriers. And I think the biggest challenges here are thinking about not just the technology in isolation, but the kind of end-to-end proposition of any of these developments, and thinking about what the kind of wider implications and the kind of legal implications, the implications for the existing financial system, the implications for commercial bank deposits, the implications for how this would interface with existing payments infrastructure. There's a whole host of kind of quite interconnected issues, and thinking about the kind of holistic proposition of any CBDC, I think, is the biggest challenge.
Yeah, it's almost such a big thing that you can't really isolate into one area which is most important to focus on, because it has such, which is why we describe it as a before and after phase, really, when we talk about the launch of a CBDC. I mean, staying with the blockchain then, because this is something which is obviously one of the things which elicits most discussion. Sky, and I'll ask Case afterwards as well, but Sky first. I mean, what would you say makes blockchain special? Why is it different from the other technical innovations that we've seen that can help improve the financial system?
The answer is manifold. Many things can make blockchain uniquely useful and necessary, and the list is continually growing. There are many benefits that blockchain can offer. Blockchain first does not rely on bank accounts. Only a cryptographic key pair, also known as a digital wallet, is what needs. This simple encryption can boost financial inclusion for the unbanked population. Blockchain can also reduce the risk of single point of failure, making CBDC systems resilient to crash, hacking, physical damage, and natural disasters. Blockchain can also enable decentralized digital identity management and prevent massive data breaches, because the technology does not rely on any single centralized system to store personal sensitive data. Also, blockchain establishes a distributed form of decision-making and consensus. It enables governance by multiple parties. Each consensus participant can have equal voting power, and the group must reach a quorum before making decisions. Distributed management is particularly crucial for currency unions, like the European Union. Also, smart contracts are easy to integrate with AI, big data, and other modern technologies, increasing the productivity exponentially. They also lay a rich foundation for further future financial innovations not yet achievable in our current framework. Blockchain can also help to combat financial crimes. As well, the transaction records are immutable on a distributed network. The so-called wirecard fraud, for example, can be effectively deterred by the blockchain technology. And blockchain also can support offline payment, giving digital currencies the benefit of physical cash. The digital signature and the fingerprints can ensure offline transactions are not altered or fabricated. The main roadblock of blockchain adoption for CBDC is the lack of transaction speed. However, speed is no longer a barrier given our recent technological advancements. The newest consensus mechanism can process and settle thousands of transactions within a few minutes or even seconds, while traditional financial transactions usually take several days to complete.
Thank you, Sky. I mean, when you list the benefits and the changes in that way, they do certainly seem so far-reaching that you'd almost be sort of, crazy not to do them. I mean, from the wirecard point of view, those of us who follow this, a slightly controversial topic, but we know that the escrow accounts in Asia were not being held properly, and your statement there is that blockchain would prevent that from happening. You would simply be able to make sure that there was consensus and trusted third parties at every single step of the way, so you simply couldn't hide things in that way. And when it comes to things like stopping a wirecard, then that kind of thing can make sense. I would, I suppose, pivot back to Simon's point that if you're starting from the point where there's a trusted center, a trusted core ledger, a trusted core source of issuance for currency. I mean, can central banks maintain that sort of trust and control on a blockchain that is decentralized in the way that you described? Because that, I think, is the difference between where you're coming from, where Simon's coming from. Can that still be maintained, Sky, on a blockchain which is fully decentralized?
Is this a question for me?
Yeah, it's a question for you, Sky. Yeah, in terms of the trust and the where CBDCs are coming from.
For the CBDC is like a technological representation of the government-issued fiat currency, and for a private system, it's backed by the credit and the trust of the central bank. However, if like a CBDC on a public blockchain, that would be governed by the smart contract code and the consensus algorithm. Is this like what you?
Yes. Thank you. So it does sound like much of the work that you've done with Cypherium can overcome some of that. Case, if I could just ask you, I mean, one of the things that that is often raised in terms of blockchain technology is privacy. How can these sorts of issues be overcome where central banks are worried about privacy when it comes to a CBDC? Can you talk about some of the work that ING have done in that regard?
Yeah, thanks. Yeah, I think it's just to make sure everybody on the call has the same view of what the problem is we're talking about. I mean, if you have a centralized system, then it's very easy for one party who controls that system to control who gets to access which data. But if it's a decentralized system where multiple parties are involved in validating the ledger updates, in a process we call a consensus, then how can you keep confidential information secret while allowing others to validate whether updates are still valid? And you cannot just simply encrypt your data, because then you can hardly do any validation on it, which is why ING works on zero knowledge proofs. In the past, we created libraries that integrated with Ethereum and Quorum. Today, we're working on a zero knowledge proof protocol that integrates with Corda, the DLT from R3, which does keep all your information secret, but yet it does also allow everyone else to verify the cryptographic proof that indeed your transaction, your ledger update is valid. And when I mean valid, I mean it adheres to the rules of the protocol. Just a very simple example. If you do a Bitcoin payment, then some of these rules, they are that only the owner of the Bitcoins, so the person who knows the private key of the address to which the Bitcoins belong, can do a payment, or a Bitcoin transaction cannot mint Bitcoins out of thin air, other than the mining reward. I mean, I like to use the example of Bitcoin because it's a well-known example, and the rules, the validation rules are very simple. Everybody can relate to them. But obviously for CBDCs, we'll have similar rules, but there will be more to it. My point being that in a decentralized ledger or blockchain, if you will, you have to have multiple parties validating the transactions, and only then you can trust that as long as a majority of the validators are honest, then only the honest transactions will be recorded. ING focuses a lot on zero knowledge proof solutions there. There are also other parties pursuing different paths. For instance, hardware-based securities like secure enclaves. Intel does that with SGX. We believe more in the software cryptographic solutions.
Thank you very much. That's a very comprehensive answer on the privacy question there. One of the things that we often hear about when we discuss this is this filter theory, of this idea that if you launch a wholesale CBDC, then you kind of have a filter that you start with the wholesale, the banks, then maybe asset managers, hedge funds, corporates, and finally the individual. And this is something which is quite contested, really, because partly for the reasons that we heard, you can have a wholesale CBDC without a retail, you could have one without the other, and there could be different underpinning technologies. I mean, Thomas, from your point of view, you spoke about the options that you've got with the Swiss Digital Exchange and the decisions that you're going to make. Were we to see a wholesale CBDC solution with the stablecoin on blockchain, what would that mean? Would there be a Swiss franc available for people to use shortly afterwards? Would one naturally lead to the other?
No, Chris, I don't think one naturally leads to the other, because right now also we have the situation that the central banks have digital money just for the banks, the wholesale payment system, but not for the retail customers. And I think it's clearly possible that you would have a wholesale CBDC in the same way, only for certain financial institutions, but not for households at large. So in that sense, it doesn't necessarily one thing lead to the other. More interesting might be the issue whether whether it's not technology driven. If you have a blockchain, let's say for a digital exchange, then the rules apparently who can participate on that blockchain is done by the exchange. There is some regulation attached to it, but there the question more is, will you have different players? Can you maybe have in the future an exchange where you also let households directly trade on the exchange and not just financial institutions? Then the question becomes more difficult. Is it then a wholesale or a retail? Even though you stay with that special CBDC only on that blockchain and only for a specific purpose, the question kind of becomes blurred. But like in the case of Switzerland, as I said, we haven't made a decision yet whether we will go live with the wholesale CBDC. That will be a decision that the board has to take next year. But on the retail side, the opinion so far has clearly been that we will not issue a retail CBDC, just because when we look at it from a cost-benefit point of view, that we do not think at this stage that the benefits are larger than the costs and possible risks.
Thank you very much. And Anniko, from your perspective, in terms of the filter theory of how you go from the wholesale through to the retail CBDC launch, when you look at the technology underpinning what the experiments that you're doing, how do you expect this to evolve? Do you expect one to lead to the other? Do you expect it to be the norm that you have a CBDC for the wholesale system and for the Florent in Hungary? How does the technology help inform the direction of travel from wholesale to resale CBDC?
Well, actually, I completely agree with the central banking colleagues, so Simon and Mr. Moser, that these are extremely difficult projects with a lot of anger. And so the development of an end-to-end project is really complex and requires resources. And so when you are making your cost-benefit analysis, on the benefit side, you must have a dedicated public policy goal, what you want to reach. And you also have to look at the alternatives. So, in our case, we have the major driving force as a synergy between existing central banking goals and between having the opportunity to experiment with new technologies. But a complete large-scale wholesale or retail CBDC has so many connection points, and of course, after a while, even if you are providing the complete set of legal and operational and infrastructural developments that are required, after a certain point, these have to go cross-border as well. So I don't think that this filter theory would apply in this case. And a lot of work, a lot of collaboration, and a lot of advancement is needed globally to reach that point when CBDCs will flourish in all other jurisdictions.
Thank you. This is back to the interoperability question, the technology design choices around that. Simon, in terms of the work the Bank of England are doing, how important is the interoperability question, and technology choices that are made at an early stage must inform that? Just talk us through how those decisions are being made, particularly with interoperability in mind, when we look at CBDC and particularly we're looking at multiple different central banks working on different options.
Well, I mean, this is a absolutely vital point, particularly if one of the benefits that may emerge from the world of CBDCs is this cross-border angle. Then this question of interoperability is vital. In terms of decisions we made, them just to be clear, we're not at that stage of actually designing a system, so we haven't actually made concrete decisions on that front. But it's clear that interoperability needs to be thought about from the beginning, and I think collaboration amongst central banks thinking about these topics to understand where there's common ground, where there is difference, and thinking about what interoperability actually means. What do you need to deliver interoperability? Some people I think sometimes assume that means everyone needs to operate the same system, the same platform. It's certainly not necessarily the case, but what is needed to ensure that if central bank digital currencies emerge in different parts of the world, that they're not incompatible. So understanding what that kind of minimum common ground is to ensure future interoperability will be, I think, quite an important topic going forward amongst the central banking community.
Thank you, Simon. Yes, a minimum common ground is an interesting concept. Sky, talk us through some of the advances that you've made as you've made your technological advancements here. Minimum common ground to allow interoperability between different CBDCs. What's the best way that that can be achieved in your view?
I believe a hybrid architecture is the best for enabling interoperability between the CBDCs, because CBDCs are closed and private systems. They cannot interact with each other without an intermediary. This creates a barrier of exchange between two different CBDCs. Central banks are unlikely to allow other countries to directly access their systems. Otherwise, malicious actors could sabotage or eavesdrop on the financial transactions of their countries. And the public blockchain can add a layer of protection for exchanging messages. Public blockchain is open source and there's no chance to leave any backdoor in it. lbry intends to become a retail digital currency for billions of users. This goal is nearly impossible to achieve in reality because no country is willing to allow another party to have full access to its domestic financial transactions and overtake their independence of monetary policy. I think a very likely scenario is that central banks issue their own CBDCs on private ledgers and connect to other CBDCs via a public ledger. Smart contract is another pillar of interoperability enablement. Interoperability between cryptocurrencies have already been done on public blockchains such as the ERC20 standard of Ethereum. Interoperability involves data exchange and message transmission. A common message format is required, such as the ISO 222 standard. This should be taken into consideration at the designing stage of CBDCs. A blockchain-based interoperability framework for CBDC would require more sophisticated design and functionalities than Ethereum. The most common use case here is the exchange of two CBDCs. For example, Alice wants to exchange her digital euro with Bob's digital dollar. Both parties are concerned that the other party will not fulfill the promise and steal their money. To solve this, they can create a smart contract on a public blockchain, lock up both of their money to be exchanged, and release the locks only after the transaction on both sides are completed.
Thank you very much, Sky. Fascinating insight into what can be achieved there in terms of the basic minimum for interoperability. There have been so many questions flooding in, both on YouTube and on the chat function. I should say that in this particular session, we're really focusing on the technology and blockchain in particular. There have been many questions on issues to do with compliance, to do with financial inclusion, to do with CBDCs as a public good, and other related issues, KYC, AML. We will cover these as part of the Digital Monetary Institute. So if you want to be a member of the Digital Monetary Institute, then please get in touch with us and you can join. And we've got the DMI journal being released tomorrow, and please have a read of that, because many of the issues that I can see that surround the CBDC space are addressed in the journal that we're publishing tomorrow. So please go online to www.omfif.org/DMI to look at that. What I'm going to do now is I'm just going to do a couple more of these polls for those who are listening and taking part on Zoom. And then I'll pick up a couple of the other questions that are linked to the technology side. And we'll also talk about scalability in the final 15 minutes, as well as taking some other questions. Sasha, can you show us the result of that first poll that we had, which was about when a fully operational CBDC would be launched? Within 2 years, 42%. So it's still a big split in the views there. Some of this is down to definitions, and I'm aware of that, but I think we've got a pretty clear idea of what we're talking about when we're excluding experiments, but including retail and wholesale. Let's ask that question again, please, Sasha. So we'll have this will be question 1B, as it were. When do you think a fully operational CBDC will be launched? Please vote again. We won't get the results immediately. We'll get them in a minute. And if you voted on that, can we have question 2, please, about the barriers to blockchain adoption? We have 4 options there. Slow transaction speed we spoke about, and I'd like to come back onto that again in a minute as well. And let's have the final poll question, please, Sasha, which is about reasons for issuing a CBDC. Thank you very much. So in these last 15 minutes, we've got a question from Ava Zhao from the Wall Street Journal, who was asking about the panel's thoughts on cross-border CBDC, and would that mean a shift away from current systems like SWIFT? We had the People's Bank of China that gave one of their DMI sessions to our members earlier this I think last month, where we discussed that in some detail. But I'd be interested to hear about the views of the panel on how the legacy systems, how the current systems will continue and what that will mean. Kees, what's your view on cross-border CBDC payments? What do you think the outcome would be from that?
How I see it is that there will be a blockchain or DLT system per currency zone. And all the FX will be with interoperability solutions like hash, time lock, or even a notary service in between. If you look at a concrete example of a very popular distributed ledger technology, it's Corda, developed by R3. It's also used in many central bank experiments. They provide out of the box interoperability between different core dApps, applications built on Corda. Also, they provide the option to use multiple notary services. And for those of you not familiar with Corda, the notary service, that's the service that provides the uniqueness and timestamping consensus on the transactions. So this also means that you can automatically shard your systems. If you look at the public blockchains, where most of them have a full replication, all the nodes store all the transactions and the complete history of the blockchain. That is not required, or that's optimized in Corda, where you only have those transactions which are relevant to you, and to validate only those transactions that you're involved in. And a good example of how they shard, or how they very smart, how they have a very clever way of distributing who gets to store which transactions, is there a possibility to use multiple notary services. So for instance, you could have a Eurozone notary service and a GBP notary service, and only when you have an FX payment from euro to GB to the British pound, or vice versa, only then you have a cross notary transaction which has a bit more overhead.
Thank you very much. Simon, what's your view of the current systems, and what role they will play as these technologies change and cross-border CBDC payments become something of a possibility?
I think, to be honest, it's a question. It's still an open question. I think to some extent it hinges on what the kind of primary motivation and use case the CBDC is being designed for, whether that's for domestic use or for cross-border use. I mean, even if it's designed for domestic use, it may facilitate a certain amount of cross-border use. The way we're thinking about it at the moment is that, or the discussion paper set out was that we're thinking about it from a domestic point of view, but one of the potential benefits is as a building block for better cross-border payments in future. I think at this stage, a lot of central banks are still in the relatively early stages of thinking about these things. I don't know if we've fully worked out kind of what those interactions will look like. But I think, kind of going back to something I said at the start, the way I see kind of central bank digital currency is not as a replacement for everything. It's going to inevitably need to coexist with existing infrastructure and potential emerging kind of new infrastructures. And so I don't think to that question, I don't think it's going to completely replace anything, but we need to find a way for it to, if it's going to emerge, for it to sit alongside and interact with these things.
Thank you. And the title of this panel is CBDCs and blockchain. So Sky, can you talk to us about blockchain and how you see this being different from working alongside or replacing some of the existing systems, such as SWIFT, as one example?
Blockchain is a completely new technology, and I believe it definitely requires a new system other than the legacy system for interoperability. SWIFT usually requires manual entry of the recipient's information and involves multiple intermediaries. It takes several days and costs hundreds of dollars to send a message. It also charges expensive membership fees and installation fees. If the CBDC still uses SWIFT, their performances will be bounded by the lower limits of the legacy system. And adopting a new infrastructure can unlock all the benefits of CBDCs because blockchain can match the speed of the CBDC and is also much cheaper. A transaction can be executed simply by scanning a QR code and settled in a few seconds. There are also other technologies that can connect conventional payment systems to blockchain and streamline the upgrade process.
Thank you. It sounds like this is one of the areas that you can build on with a great deal. It's almost an unlimited extension onto what you can build if there's something that the central banks have a core technology. Annika, turning to the Central Bank of Hungary, we often hear about scalability when we're talking about this. And what I mean by that when I'm saying that is the number of transactions per second in the way that Sky was talking about, the cost reductions as volumes rise, and the ability to do more and for more actors to take part. Is there enough trust in blockchain as a technology to allow scalability to run its own course, for the central bank to start with the core ledger, the core idea, and for blockchain technology to allow the sort of scalability that we're talking about, that allows the kind of opportunities that Sky was just outlining?
This is a really valid question. So when I was presenting our case, I was talking about the pressure from other public authorities towards the central bank to come out with some blockchain project so that they could verify that this is a really trustable technology and also is able to use in other public fields like in the notary system or any other system. So it would really be a huge moment when a central bank would come up with a system relying on the blockchain technology overall. And in this way, I think that since the financial industry itself has been using and also adopting very quickly this technology, in theory, this is not very far from the central banks themselves to also adopt the technology for financial means, especially if we take Simon's message that nothing will be replaced completely, only some segments will be covered. So I do believe that learning by doing is the right method, and so that the central bank can come up with smaller scale projects, and as time passes and as the system proves to be trustful, it can be scaled up in further cases.
Thank you, Annika. Simon, is there then a tension between scalability and decentralization? Is it the case that if you want more scalability, you have to accept a degree of lack of control or lack of centralization? Or can there be a harmony in, I suppose, growing together in the public-private partnership when it comes to developing new technology around CBDCs?
I think that's probably the million-dollar question: is finding that that harmony amongst a wide range of different kind of attributes that a CBDC may need to have, and finding the right balance between different trade-offs within that kind of wide spectrum of different choices. I think is one of the key questions that overhangs this. And I think, I mean, clearly that's one of the well discussed trade-offs in the blockchain world. The more decentralization you have, the more resilient something is, but perhaps the less scalable it is. I know there's been continuing kind of advancements in that front, so it may not be such a kind of fixed position, and it may be possible to achieve that scalability. But finding kind of this kind of roadmap of different attributes and different features you need, and understanding which technologies can help deliver the best mix of those, I think is the key question that we're grappling with. I think the scalability one is a particular challenge, thinking about any technology for a retail central bank digital currency. It's quite hard to mimic in testing some of the requirements there to do some kind of large scale kind of, how would it perform in a real world scenario of being used across a whole population of the country. Trying to understand the demands on that sort of technology is quite a difficult challenge to work through. And so I think learning by doing is key, but thinking about how we can best learn the answers to the right questions is important.
Thank you. Kees, as someone pioneering some of the technology in a private sector organisation, how can you be part of the scalability answer while making sure that the role of central banks is respected and well understood by them?
Yeah, so one should not exclude the other. Obviously, there's a central role, and it's a central system with central banks minting issuing the CBDCs. But obviously, we are always in favor of fully decentralized blockchain or DLT solutions, because only if a DLT is deployed fully decentralized, only then you can trust the decentralization. You can trust that your view on your data is really your copy of the ledger, and you don't need to keep a shadow book administration that you keep aligning and keep comparing with the DLT, like with traditional central systems. So what we see in practice is sometimes a blockchain solution starts in a very centralized setup where a fintech runs all the nodes and controls all the keys, etc. And then it really doesn't make sense. Only if all the network participants, as in the case of a wholesale CBDC, all the wholesale banks run their own node, and they control their private keys, and they control their environment. And there's a decentralized consensus algorithm. Only then you have the benefits of DLT, which is that you have full trust in the fact that your shared data is correct, and you no longer need to compare the books that you have with the books of your counterparty, a process we do today, which we call reconciliation, which is very inefficient.
Thank you. Yeah, that is the new what the new world would look like were all this to be implemented. We've got about 5 minutes left, and I'm going to ask you all just to have a think about the role that you think blockchain will play in central bank operations in 5 years now from now. So just have a think about that while we look at these poll answers. Sasha, can we just look at question 1A? So the results that we had from the beginning of who thought what from when a CBDC, a fully operational CBDC would be issued. You showed these before. Just show them again on the screen if you may, Sasha. So that was what we saw when we asked the first question there, 27%, 51%. And then when that question was asked again, what was the answers? Can we see that? I think they were don't know if that changed at all or whether everyone voted the same way. It's difficult to tell. I should remind the panelists that the people voting here tend to be central bank representatives. That's most of our audience on Zoom, the central bank representatives. If we go to the second question, the question that we used for the barriers to adoption for blockchain technology, let's answer to that. Still very risk-averse people, the central banking community watching here. Say slow transaction speed is fewer than I would have thought. We can have about 100 people voting, I've heard, on this. The slow transaction speed is I thought that would be a higher percentage. And then in terms of the rationale, the reasons for issuing CBDC, smart contracts plays an important role there as well, and that's one of the things that we haven't spoken that much about. Thank you very much. Fascinating poll results there. So as we draw to a conclusion, I'll go in reverse order and ask you to finish with your thoughts. We'll go back to you then, Kees. What do you think, how do you think central banks will be using blockchain technology in 5 years' time?
I think the role of central bank will be just issuing the CBDC and controlling the amount of it, so issuing and redeeming. I think for the rest, the whole infrastructure will be decentralized, so banks running their own nodes, also KYC, AML, all those tasks will remain at the banks. So I see the role for the central banks very limited. May I also respond to the survey, or is that due to time constraints?
Yes, please do, yeah.
So yeah, just very quickly about this concern that is shared among the participants about the scalability. I can only reiterate what Sky already said, that modern technology, consensus algorithms like PBFT can easily process up to thousands of transactions per second. So I'd love to discuss that in more detail, but due to time, we can't go into the tech details there, but I disagree with that concern.
Thank you very much. Sky, how do you think central banks will be using blockchain technology in 5 years' time?
I think that the central banks really need to keep up with the newest trend and innovation in the technology. So the central banks will very likely to issue their CBDC on blockchain. And they also need to develop new tools for regulatory insights and the KYC and AML process. Because the smart contract can enable automatically executed financial transactions, this is never seen before in history. And there are many, so the technological innovations is at unprecedented speed. For example, recently the buzzword DeFi, which stands for the decentralized financials, is like quite popular in the cryptocurrency world. It first started with decentralized exchanges and automatic market makers that simulate stock exchanges and the central banks respectively. And it replaced the human works with computer algorithms. What's noteworthy about DeFi is that its evolution far exceeds the reaction time of the authorities. Like just a few days ago, a DeFi project received over $600 million worth of cryptocurrency deposits in a span of a few hours. But a line of code went wrong, allowing an infinite number of coins to be created, and the project collapsed in the next few hours and lost 99% of its value. And this example has shown how irrational the current DeFi market and the upcoming whatever new market based on the new technology can be. So central banks must learn and keep close relationship with the private sectors, especially the fintech companies, to keep up with the radical changes.
Thank you very much. Thomas, Swiss National Bank in particular, central banks in general, how will blockchain technology be used in 5 years' time?
Yeah, I think, Chris, that there is a high probability that a DLT ecosystem will grow up around central banks, that you will have different types of financial market infrastructure based on DLT. And then the question for the central banks is, how do you get central bank money on that DLT? If it comes to pure retail CBDC, then I'm in the camp of those who believe that you do not need a blockchain or a DLT, that it's more efficient to use a different technology. And in fact, I'm working here on a little research project together with David Chaum, who is one of the godfathers, or if not the godfather of cryptocurrencies, and Christian Grothoff from the University of Bern. And we have a proposal how you could issue a retail CBDC, not based on blockchain, but still based on public key cryptography. So I hope we can issue that soon and show how we would do that. Thank you.
Thank you very much. Simon, the same question, the use of blockchain in central banks 5 years hence.
Can you hear me? Sorry, I've just been unmuted.
Yes.
Yeah, it's a great question. I think I agree with some of what most of what Thomas was saying. I think the key question for central banks is the ecosystem that grows up around us and how we continue to serve the financial industry as things evolve outside of our walls in terms of how we may or may not use blockchain ourselves. I think what we may come to see is blockchain as the kind of this catalyst, the spark of innovation, and maybe aspects of the technology that find their way into adoption in different parts, but that may not necessarily come to be defined as a blockchain itself, but sparking this innovation and this way of re-examining the way things are done, which I think is the kind of one of the main things that the whole kind of Bitcoin and blockchain ecosystem has done, has prompted the financial system to rethink the way things have traditionally been done.
Thank you very much. And Annika, if last word to you, you have spoken about the experiment that you're doing with blockchain technology at the beginning. 5 years hence, how do you see blockchain being used by your central bank in particular and by central banks generally?
I do believe that central banks will use blockchain technology in the fields where they find it to be the most effective. So there will be no special status of blockchain. It will be one of the options, and they will use it with ease. And I would just like to refer to what Keith told us about the ambition of the ING to become the tech company with banking license. So in the changing world, the central bank's role will also change. So they will not only issue prudential or consumer protection standards, but they will also have to issue technical standards for the industry and also for its partners, because it will have to decide on the minimum acceptable technological criteria as well to cooperate with the different parties. So this will be a really exciting time ahead of us. Thank you.
Thank you very much, Annika, and a massive thank you to the central bankers and the two gentlemen from the private sector organisations who shared your views so frankly and gave us some new information that we otherwise wouldn't have had. That is one of the best things about the Digital Monetary Institute. If you're watching this on YouTube afterwards, please subscribe to our channel or subscribe now and leave a comment. If you've left a comment or asked a question, please feel free to get in touch. Look out for our DMI journal that we release monthly that's coming out tomorrow. The poll questions were fascinating. So 54% of people at the beginning of this panel thought that in 1 or 2 years, so either 1 year or up to 2 to 3 years, there'd be 54% of people thought a CBDC would be launched. That increased to 78% at the end of this panel, which shows that from a majority of central bank audience watching this, there's an increase in the view that there will be a CBDC launch within the next 2 or 3 years. So that shows that we have moved the conversation on our own in the last hour and 15 minutes. Thank you all so much. If you have any further questions, please feel free to get in touch with OMFIF DMI at any